Welcome to the Cover Your Assets podcast, a show for the physician who understands the importance of protecting everything you've worked so hard to achieve. If you're ready to find the peace of mind that only financial security can bring, let's get started. Here's your host, Billy Gwaltney.
Welcome to today's episode of the Cover Your Assets podcast. I'm your host, Billy Gwaltney. It's good to be with you as always. Today I'm going to answer the question of how bad is the AMA disability policy. I do occasionally get asked about that policy with the AMA that a resident or fellow may be inquiring about. And there really are some significant gaps. It has nothing to do with the insurance carrier they're with. It's a reputable company. I've assumed that the AMA means well with offering the policy, but from a contract language standpoint, there are 5 key elements or gaps to this coverage that you need to know, and it is a buyer beware situation. Disability insurance, unfortunately, is one of those things that you can buy and think it's going to do what it's supposed to do and need it, and then find out it's not going to show up, and then it's too late to do anything about it. So I take this serious. I want to go over these with you here today and real quick, and then obviously can discuss with you in more detail if you'd need. And this is verifiable in writing as part of their contract. The first key element is that the top specialty carriers that I broker provide what's called a true specialty own occupation definition of disability. And that means 2 things. One, it means that if an illness or injury prevents you from performing the material duties of your specialty or subspecialty, then you get your full benefit check. You're totally disabled for policy benefit purposes. The second part is that there's then no penalty for income you later earn doing something different. And that's key, okay? If you can't do interventional cardiology, you're disabled, you can then do general cardiology and make an unlimited income and still collect your full policy benefit. And there are numerous examples in addition to that. The AMA policy does not have this definition. They'll call it specialty specific, they'll call it things, but if you earn income doing something different, and if there are certain duties that you can still do, all bets are off, okay? It's not the same definition of disability that the true specialty individual carriers offer. And so the devil's in the details for that. So again, read that definition. We can talk about it related to your specialty if you would like to. The second key element is that the discounts with the private specialty coverage that I offer for trainees, or if we get one for attendings, those discounts are permanent and the premium is fixed for the life of the policy. And that's a big deal. It's called non-cancelable and guaranteed renewable. The insurance company can never cancel it. You can cancel it anytime, but they cannot. They can never change the definitions and they can never increase the rate, okay? The AMA policy premium will increase over time and can further increase by classification, and the discount is not guaranteed. Okay, so there's no fixed or guaranteed element to the premium related to the AMA policy. Okay, that by itself would also be a deal killer. The third key element is that the coverage I broker with the top specialty carriers is individual coverage. It's an individual policy, which means you own it and you call the shots once the initial premium is paid. So once you're approved and the policy's issued, as long as you pay that premium, again, it's non-cancelable and guaranteed renewable. It's an individual policy. It's portable. You keep it for life. And as long as you pay the premium, the insurance carrier has to perform. They can't change the definitions. They cannot increase the rate. They cannot cancel the policy. Okay. The AMA policy is technically a group certificate. It's a group policy, which is a huge red flag, okay? This is not good because a group policy, you do not call the shots. The group owner calls the shot. The person that is on the certificate decides what the terms are, what the rate is. If they want to cancel the policy, just pull it. They have the right to do that. The other key element is that because this is a group certificate, the AMA policy, it can offset other group coverage you may have through your employer, because a group employer policy will not pay from other group benefits. If you receive that, it offsets for Social Security, it offsets for government benefits, it offsets for other group benefits. and it offsets for other income. An employer policy will. And so the AMA policy can get challenged as another group policy. So that's a risk that you run. The fourth key element or gap is that the coverage I broker with the top specialty carriers offers a partial or residual benefit that pays you if you're partially disabled, okay? And you do not have to be totally disabled before you can collect that partial or residual benefit. The AMA policy states they do have a partial benefit, but it requires that you be totally disabled prior to being residually disabled, okay? This is what's called an out clause, okay? It's very possible for someone to be residually or partially disabled without ever having been totally disabled beforehand. And so in order to collect on the AMA policy partial benefit, you have to be totally disabled first. The fifth key element is that the coverage I broker with the top true specialty carriers offers what's called a long-term recovery benefit, which is vital. This pays if you medically recover from a disability and return to work, but when you return to work, your income does not recover to what it used to be, and that happens a lot. We've got clients that have collected for over a decade because a family medicine doctor was out for 2 or 3 years, came back, his practice evaporated, had to start over. He's never seen as many patients as he used to see. His income will never recover. And he continues to collect a recovery benefit from his private disability policy. The AMA policy does not offer a long-term recovery benefit. That by itself is a deal killer for a properly designed individual specialty policy. So I've listed 5 things here that are problematic with the AMA policy. They may fight that. They could technically change that and improve those things. They haven't. As of the time I'm doing this, based on all the information we've seen, the policy is probably one of the worst I've read or seen. Again, I don't believe that was intentional. It's just there are so many out clauses with this. It is buyer beware. Make sure that you're getting what you think you're getting. I would be happy to discuss your specific situation in more detail. Feel free to reach out to me. 704-270-2376. You can text me and we can schedule a time. Again, 704-270-2376. Again, this is Billy Gwaltney. I enjoy this time. Thank you for carving out a few minutes. Hope you found it helpful. We'll see you hopefully soon.
Thanks for listening to the Cover Your Assets podcast, an Odd Conduit media production. New episodes drop every 2 weeks. If you've enjoyed the conversation, subscribe, rate, and review this podcast. For more tips and advice, visit the website and YouTube channel. Check the show notes for links. Join us next time for another episode dedicated to helping physicians like you get your disability insurance right and protect your way of life.